So the RBA have cut interest rates to 1%. Let's have a look. Good afternoon, everyone. I'm Florian Heiser, and welcome to another episode of Heiser Says. I have my stein of coffee, and I was relaxing here preparing for tonight's video, which is on foreign investment in a property sector, when all of a sudden, before 4 o'clock, which is when they said they should do it, I saw the announcement that our interest rates have been cut to 1%. The cash rate is at 1% now. I thought we'd read through this statement from the governor of the Reserve Bank, the RBA, and just have a look and have a bit of a discussion. I'll still put out my video tonight, but yes, I was talking to a few other people as well about this who were thinking maybe they'd hold off on this cut now because of the signal it sends to the economy and just to people psychologically. It'll destroy consumer confidence, or at least that's what I think. It's you have to understand a lot of this economics is also to do with psychology and how people respond to signs and triggers. That's why, when you get a new prime minister or, the Trump effect or a new CEO, often they'll do bold statements or bold moves, and then that'll encourage people and it'll create economic stimulus. And people aren't as rational as everyone thinks, particularly economists. And I know there's the psychological aspect of purchasing and engagement in the market is now being studied more and more, and it's quite fascinating, but I'll get into it another time. Let's have a read through this. So at its meeting today, the board decided to lower the cash rate by 25 basis points to 1%. This follows a similar reduction at the board's June meeting. This easing of monetary policy will support employment growth and provide greater confidence that inflation will be consistent with the medium-term target. Now, if we remember, the last time I was looking at inflation, you can see here in March 2019, it was at 0% that quarter, that quarter they measured. So they're trying to stimulate the economy. They're trying to encourage people to invest and spend money. But the problem is it's so low. It's so low that, are you going to spend money when you've got no confidence anymore? Are you? I'm not. I'm not. How many people are going to put your money in US dollars or something else? The outlook for the global economy remains reasonable. There's his favorite word. Good old Governor Phil. He likes reasonable economy, However, the uncertainty generated by the trade and technology dispute is affecting investment and means that risks to the global economy are tilted to the downside. Okay, now remember, our economy here in Australia, and this is from the Observatory of Economic Complexity, you can see here how much of our, what we're exporting, but who our export partners are. Hang on, let me just find it. It's down here. There you go. You can see. Sorry, guys, to control this with the way I'm doing it, it's a little bit clunky, but you can see China here. Oh wait, no, that's where our imports are coming from. Sorry, our exports: China 35%, United States 3.5%. If they're having a trade dispute, how's it going to affect us? So there you go. These things all need to be taken into account. So, in most advanced economies, inflation remains subdued, unemployment rates are low, and wage growth has picked up. The slowdown in global trade has contributed to slower growth in Asia. In China, the authorities have taken steps to support the economy while continuing to address risks in the financial system. Global finance conditions remain accommodative. The persistent downside risks to the global economy combined with subdued inflation have led to expectations of easing of monetary policy by the major central banks. Long-term government bond yields have declined further and are at record lows in a number of countries, including Australia. Bank funding costs in Australia have also declined, with money market spreads having fully reversed the increases that took place last year. Well, there you go. So if any of your banks tell you, oh no, we can't pass on these cost savings for you, well, tell them the Reserve Bank says you're lying. Give me a deal. And honestly, if you don't get this passed on to you. If you've got a mortgage and this isn't passed on to you, get on the phone and ask. And say, well, such and such credit union is giving a better rate. Can you match it? All it takes is half-hour phone call and, annoying robo-call machines. If you just press 0 100 times, that usually gets me through. But anyway, you know what I mean. You know what I'm encouraging to do. So, borrowing rates for both businesses and households are at historic low levels. The Australian dollar is at the low end of its narrow range of recent times. Over the year to the March quarter, the Australian economy grew at a below-trend 1.8%. Consumption growth has also subdued. That means, consumer confidence, weighed down by a protracted period of low-income growth and declining house prices. Declining house prices, that means your assumed wealth. So if you got your house is worth a lot of money, you kind of feel like you're rich, so you go and piss away some money, pardon my language. Where am I? Yep, 5 minutes in. Okay, they won't watch that naughty word on YouTube. That's good. That'll be good. So increased investment in infrastructure is providing an offset, and a pickup in activity in the resource sector is expected. So they're making an assumption there, partly in response to an increase in the prices of Australia's exports. What? Okay. The central scenario for the Australian, but okay, when our I'm confused. Partly in response to an increase, so they want to have increased infrastructure investment is providing an offset, and a pickup in the activity in the resource sector is expected, partly in response to an increase in the prices of Australia's exports. Is this as in we're getting more, we're able to sell it more because the Australian dollar is declining, or the prices of our exports are actually more expensive, which is concerning when so much of our exports are going over to Asia, and Asia, China's particularly starting to stimulate their economy as to offset America's trade issues with them. Yeah. So, anyway, the central scenario for the Australian economy remains reasonable. There's that word again. Does that inspire you with confidence? If you're talking to someone, I like them, I'll go out with them, they're reasonable. I don't know. With growth around trend expected. Okay, well, let's look at our GDP growth. The last time, trending down. So if they have growth around trend, growth maintaining that trend, trends down, what's that mean? The main domestic uncertainty continues to be the outlook for consumption, although a pickup in growth in household disposable income is expected to support spending. So say you've got $400,000 mortgage, you're saving what, $60 a month? Are you going to spend that? Or maybe it'll get offset by your increased power bills or your increased petrol costs. So employment growth has continued to be strong. Labour force participation is at a record level. The vacancy rate remains high, and there are reports of skill shortages in some areas. There has, however, been little inroad into the spare capacity in the labour market recently, with the unemployment rate having risen slightly to 5.2%. And I wonder if that also is taking account of the underemployment of people. If you work 1 hour a week doing Uber, you're employed. Remember, there's a gig economy now, so they really need to get some other matrices to assess this, some other indices. You've got the unemployment rate, maybe the underemployment rate, maybe the extreme underemployment rate, and we could compare them all to get a better understanding of just the nature of our modern technologically driven economy. If you know of any examples, guys, or you can point me to them, please let me know. I'd appreciate it. So the strong employment growth over the past year or so has led to a pickup in wages growth in the private sector, although overall wages growth remains low. A further gradual lift in wages growth is still expected, and this would be a welcome development. Taken together, these labour market outcomes suggest that the Australian economy can sustain lower rates of unemployment and underemployment. Okay. But it all hinges on consumer confidence, frankly. Inflation pressures remain subdued across much of the economy. Inflation is still, however, anticipated to pick up and will be boosted in the June quarter by increases in petrol prices. Oh, that's what everyone wants. Okay, so you've got a recurring spend that consumers make every week. If you start seeing your petrol price go up, are you going to notice that psychologically? Will that then curtail spending in other areas? Will that offset any of the potential benefit of a reduction in your mortgage payment? Let me know what you think, because this is what you're going to notice every day. The mortgage payment, will you notice it? Will you notice it as much as tapping the credit card? The central scenario remains for underlying inflation to be around 2% in 2020 and a little higher after that. Conditions in most housing markets remain soft, although there are some tentative signs that prices are now stabilizing in Sydney and Melbourne. Growth in housing credit has also stabilized recently. Demand for credit by investors continues to be subdued, and the credit conditions, especially for small and medium-sized businesses, remain tight. Mortgage rates are at record lows, and there is strong competition for borrowers of high credit quality. Today's decision to lower the cash rate will help make further inroads into the spare capacity in the economy. It will assist with faster progress in reducing unemployment and achieve more assured progress towards the inflation target. The board will continue to monitor developments in the labour market closely and adjust monetary policy if needed to support sustainable growth in the economy and the achievements of the inflation target over time. Okay, now here's one thing to consider, and I got this data from the ABS because it's relative to the video I'm going to do later today, and this is the building approvals in Australia April 2019 from the ABS. Now this is dwelling unit approvals trend, look at how that's trending, and private sector housing approvals, look at how that's trending. This is from 2018, how it's trending down, So if you have this reduction in interest rates, is the potential benefit for it to improve the economy by stimulating perhaps the housing sector going to be offset by other cost increases and just the perceived lack of confidence in the economy that will just flood through everyone? So there you go. That's my concern. I think this is sending a message of weakness out to the public, and people are going to pick up on that, and they will respond to that, particularly if you've got other costs going up. I had to feel we've moved from we started with a Smart for Two, a little tiny bubble car, then we went a Camry hybrid, and now we're like some Kia car with 50 children in it. So my petrol costs have gone up, and I've noticed it. And, that kind of affects some of your other decisions that you make on a day-to-day basis. So, guys, let me know what you think. I'm surprised, honestly, that it happened this month. I thought he would have held off a little bit, just because 1%. Do you reckon he'll go below 1% next month? What will that do to people? What will that do? How many people will shift their money, out of Australia if they can afford to do it one way or another? I don't know. Anyway, guys, let me know what you think. Do you think we'll see an uptake in housing approvals? What was this? Let's see, April 2018 to April 2019, total dwelling units approved is down 21.8%. That is a huge number. Seasonally adjusted is down 24.2%. Wow. Just from March to April, it's down nearly 0.6%. Private sector houses. Yeah. Well, there you go, guys. It shows you where that's trending. So I just thought I would report on this and would read through our governor's statement here. Guys, let me know what you think. I'm cynical. I don't know. I just think that consumer confidence will be damaged by this to the point that it may undo a lot of it. Sure, maybe the bigger players will have enough money to spend and start throwing it around. But please stick around for tonight's video on foreign investment in Australia. It is just insane. It's just insane. Anyway, guys, like, share, and subscribe. Enjoy your Steiner coffee, and I'll see you later today. Bye for now.